Hello, fellow traders. This is TheRumpledOne. The reason why I'm laughing is I went through the full video and then at the end it said failed to record. So life's just funny. So this is the second time through. It is Tuesday, September the 21st. The year is 2021. Let's talk trading. Your expectations when trading. When I hit the record button, I expected it to record, but it didn't. These videos are for educational purposes only. Your results may differ from mine. So, expectations. When you place a trade, your expectation most likely is that you're going to exit that trade with a profit. Because if your expectation is you're going to exit that trade with a loss, chances are you wouldn't have taken that trade, right? I don't think anybody goes into a trade really expecting that they're going to lose that trade. Nope, they're probably thinking their analysis, their chart reading, their indicators, their method is telling them that if you take this trade, you're going to win. But you know that that's not always going to be the case. But what I'm really thinking about is when you have expectations that are almost met. So, for example, you put a trade on and you expect to take 5 pips off the trade. Based on your analysis, price is going to go, say, from 40 to 45. Price gets to 44 and stop. What do you do? Well, price can do one of three things. It can sit there, but it could also go against you, or it could go in your favor. I have a saying: if it stalls, it falls. So if price is going up and it stalls, chances are it's time to get out, especially if you get a 1 ball, 2 ball, 3 ball there. But sometimes, that does mean breakout, and you might want to wait. But then again, what happens if it slams against you and that 4 pip profit's erased, and now you might have to take a loss? You had expectations of 5, you had 4 in the bank, you didn't take it. Now you're looking at a loss. Probably you are going to have some different things going on in your head. And this is where the brain management aspect of managing your expectations comes in to play. So if you've got 4 pips and you want 5, you're 80% of the way there. So do you want to really risk 4 pips to make 1? Because that might be what you're doing. So if you think about it that way in terms of risk, do you want to risk the 4 pips to make 1 when you're up 4 pips? Maybe you do, maybe you don't. Because what'll happen is after you get out, price can do one of 3 things again. It can sit there, but we know sooner or later it's going to make a move one way or the other. And if it moves your way, are you going to have the the regret of getting out, or the robs, the regret of being stupid? If you do, you need to stop it. You need to stop it. You need to change the way you think about the market and about your trading. You say, hey, I just made 4 pips. Great. I'm going to wait for my next signal. And you don't worry about if you could have made more or not. And, I'll just be open and honest. Yeah, sometimes I'll tell Walmart when we're trading, say, oh man, I just left X pips on the table. Dang it. But, I mean, I know inside, deep inside, internally, I know in my brain management, it's just like, doesn't matter. I'm just doing what I do. I mean, sometimes I get on what I call the pip it to death mode, where literally I'll go in a trade, and as soon as I'm up a net 1 pip, I'm out. And I do that over and over and over. And I wait for my opportunity. When I get it, fine. Now, sometimes if it really spikes, then maybe I'll take more pips. Do I expect to make a pip? Yes, that's what I expect to make. But sometimes instead of me getting a full pip, I might only get, 5 points or 7 points. because the market was moving. It stopped, and it's like, well, if I'm expecting it to go up and it's not, if it's not moving in the direction I'm expecting it to move, then it's telling me it's not moving in the direction that I expect it to move. And if I've got profit, take the profit and just get out. I mean, that's just listening to the market. Okay, so on the monthly chart, you can see we're only 11 pips off the monthly low. And we've got 3 gaps that haven't filled on the weekly. And the pound is 11 pips off its low and 86 or 87 pips below the weekly open. Now, it's 10 pips above the yearly open, which is really interesting. You see it actually crossed and came back up. So it looks like this 3640 area is definitely pushing price up. But if you look at this candle, you can see price was all the way up here, and then the sellers just pushed it right back down. I'm wondering if somebody's loading up for the FOMC announcement tomorrow. Maybe it's going to be really bad for the dollar and the pound's going to run up a couple hundred pips. We had an weekly inside bar 4 weeks ago, and you can see here that the pound is sitting right here in about the lower 25% of the area, or 45 pips above the inside bar low and 128 below the inside bar high. And there's some other inside bar action over here. On the range, we've only got 52 pips, but notice the other pound pairs are all over 100. I think when I counted in the last video, we had 10 or more pairs 100 or better. We missed the pivot from yesterday. We hit today's pivot and then reversed. The green rats should be enjoying some cheese right now. And for some strange reason, this isn't on the pound. So price near R1, the bias was short, or near the pivot was short. You can see here we went above the pivot, hit the top of the central pivot zone. That's what TC means, and BC is bottom of the central pivot zone. And one of these, I believe it was this one, was yesterday's midpoint. And so you just do a mirror image on the other side. So if this was the midpoint, you do a mirror image. That's how you get the top of the central pivot zone and the bottom. And you can see here the daily open. We came back down to it and we moved back up. And I mentioned in the other, in the first take, that, you know, if you've been watching my videos, you know I call the 40s, when the pound is the launch pad. And when price gets in the 40s, anywhere from 40 to 49, it usually launches, and it usually goes to 60. So I'm expecting price to go to 60. But all along the way, I've been in and out of trades, because if it starts coming back the other way, even though I expect it to hit 60, but price is moving against me, I'm taking the profit off the table. And once again, in and out of that lower daily wick zone of yesterday. And so right here's a perfect example. I'm expecting price to move up. I see a one ball there. I've got about a minute and a half left in this candle. I'm 3 pips above the highest low of the 1 minute highest low, so I might just wait patiently. One of the things I have learned to do, or sometimes I do, is I'll wait for the 1 minute candle to close, and then right when it opens, if it goes anywhere against me, I'm out. And sometimes that first move is a fake out, and sometimes it isn't. But I just wait patiently. So you can see it's pushing against the 3 ball on the M1. And remember, when these balls first appear, that means price is breaking out. So you see here a 2 ball, so price was breaking out. 2 ball means a 13 period range. But if you look left, you can see there was a 1 ball. So this is a reversal area. So look for price needs to get above, say, this level to then reach the 60. But if I'm in at the 40s and I get out at 55, I'm usually more than happy. Looking at the Walmart lines, we can switch over to the 1 hour chart here. You can see price H1 was green at the 50 line, clear indication. But then again, if we move back down to the M5, you can see here it went up one time. Once again, maybe you were looking for 60, didn't quite hit it, started to come the other way, take your profit. Here again, another opportunity. You see here it's inching up, came back down. Maybe you were out, maybe you were saying, oh, I'll give it some breathing room right here. You might have been sweating it, but then you were rewarded. So once again, managing your expectations and making sure they're realistic, and then adjusting them in the moment based on what price is doing. So right here, price is in the wick zone of the previous M5 candle. You know it's going to leave the wick zone. You just don't know which way. So either it's going to drop or it's going to break through. And we don't know. We have to sit and wait. You know, based on the previous 3 candles, looks like it's going to go up because looks like we need to have a more range than 16 pips. But maybe not. You can see it hit and stalled, starting to come back down. So right now you'd be sitting on a 5 pip profit if you took the 50 break. Do you take it? Or do you give some back? That's the question. Here we go, chance for a break. Price is stalled. And there we go. So you can see here, you can use the wick zone even down on M5 if you want. Now you can see price is pulling back. Now right here, if it drops below this level, starts to come through these wick zones, might be an indication to get out. Take your profit. You're 2.4 pips away from hitting the 60. How much are you willing to give back? You've almost got 80 right there. You've got 80% of the goal. Do you give it back because you want the 60? You just have to wait and see. Now there's this big return bar here. Price should probably get to. I expect price to get to it. But the thing is, it might do this. And so do you want to stay in that trade or not? These are all questions you have to answer for yourself. As you can see, we're moving out of that rat zone. And looking at the ATR, we're 18% ATR range above the daily open at the moment. Wow, you can see prices hitting highs and lows this hour everywhere. So, fellow traders, I hope that helps. Let me know what your expectations are when you enter a trade. Just remember, when you enter a trade, it's not what you trade, it's how you trade it. So go out there and drain the banks. I'd like to give a shout out to those over on Reddit who joined that group there. I appreciate it. This is the Rumpled One. Over and out.